If you want to be rich, learn not only to earn but also to save money. With these words, welcome you all to ABS Creations by your educationalist Chandrakala. Do not save what is left after spending, but spend what is left after saving. If you have not subscribed the channel, subscribe the channel by pressing the bell icon to receive the notification. In this video, we are going to deal about the loan activities which is carried out in the bank and the credit situations under Money and Credit Part 2 of Economics Grade 10. In the previous session, under Money and Credit Part 1, we have learnt about how money acts as a medium of exchange. We have learnt about the concept of barter system of exchange. So, barter system of exchange is nothing but where goods are directly exchanged without the use of the money. So, that is what we used to say it as a barter system. So, here money plays an important role. Money plays an important role as a medium of exchange. So, in this particular session, we are going to deal about the activities which is carried out in the bank. First of all, what do you mean by the word bank? A bank is nothing but a financial institution whose demand deposits are widely accepted as money for making payments and has the power to create money. A bank is a financial institution whose demand deposits are widely accepted as money for making payments and has the power to create money. So when we see something about some activities of banks borrow money to lend. From whom the banks borrow money to lend to the others? They borrow the money from the depositors. Whom we call it as a depositor? A person who opens an account in any of the bank. A person who opens an account in the bank in the name of her or him, where he or she deposits his extra amount of savings. A person who opens an account in any of the bank where he or she deposits his or her extra cash as savings. So he or she is called by the name as a depositor. When a depositor opens an account and saves his money, the bank will provide an interest for that particular amount, what he has deposited in their bank. The bank will provide what? The interest for the amount deposited by the depositor in the bank. So this is what we say it as a depositor. Then whom we call it as a borrower? A person who borrows the money from the bank. A person who borrows the money from the bank or from the relatives or from the money lender. So he or she may be called as a borrower. Whom we call it as a lender? A person who funds the money to the borrower. A person who funds the money to the borrower. So in such cases, we can see the various functions or mechanisms took place in the bank, or it takes place even now in the bank areas. So what is that interesting mechanism over here means? So the depositor, we have seen whom we call it as a depositor, a person who opens an account in the bank and deposits his extra cash as savings. So he or she deposits his or her money in the bank. So what happened? The banks keep small proportion. For example, 100 members are holding the account in a particular bank. 100 members are holding a account in a particular bank A. So what happened? So 100 members. So each one of them will not deposit the same amount of savings. So one may deposit 1,000 rupees in his account, one may deposit 10,000 rupees in his account, another it may be 1 lakh or it may be a crore. So the amount of deposit of money may vary from one depositor to the another depositor. So according to the money deposited by the person, so he gets the rate of interest for his money in the bank. He gets the rate of interest for his money. So what does the mechanism carried out in the bank here? So with all the deposited 100 members' money are there in the bank. So one person 1,000 rupees, another person 10,000 rupees, another person 1 lakh, another person 50,000. So they will count everything for a particular day. So the banks, what they do, they keep the small proportion of their deposit. The small banks keep what? So a small proportion of their deposit as a cash with themselves. So that is 15%. So 15% of the deposit, they will hold it as a cash in the bank for daily transactions. So for what purpose is 15% of the deposits as a cash is kept in the bank here in a daily purpose? So it is mainly kept as a provision to pay the depositor. To pay the depositor who might come to withdraw money. Who might come to withdraw money from the bank on any given day. So as I told you in the previous video, so a person who is saving an account, saving a 10,000 rupees in 1 month, in the next month he is in need of money. So what he will do, he will go to the bank and he will demand 5,000 rupees from his account. So that is what we say it as a demand deposit. We say it as what deposit here? Demand deposit. So banks keep small proportion of the deposit as cash with themselves. So how much percentage they keep the deposit as cash here? 15% of the deposit as the cash. For what purpose that 15% of the cash is kept means it is a provision to pay the depositors to pay the depositors who might come to withdraw money from the bank on that particular given day. So whatever the 15% of cash, so the bank is able to manage with that particular amount. So every depositor on the same day, they will not come and demand their deposit. So that 15% of the cash is kept in the bank to manage the demand depositors. At the same time, so the remaining amount, 85% of the cash is there, isn't it? So banks utilize. What they do means banks utilize the major portion of the deposits. They utilize the major portion of the deposits to extend loan. That is, they provide loan. So we have learned the banks borrow the money to lend. Do you remember from whom they borrow? From the depositors. So banks use the major portion of the depositors' money to extend loan. That is 85% of the cash. So whatever, so for example, they lend the money to the people who are in need. So at the rate of interest will be very high. When the banks provide loan, to the lenders, when the bank provide loans to the borrowers, automatically the rate of interest collected by the bank is very high. So they provide the loan to the borrowers. They provide the loan to the borrowers who are in need to carry out various economic activities. So banks use the major portion of the deposit to extend the loans to the needy to carry out the economic activities. But what is the rate of interest collected from them? The rate of interest collected from the borrower by the bank is very high. Whereas the banks will provide the interest rate to the demand depositor also. Why? Because they have deposited their money as saving in their account in the bank. So the rate of interest paid by the bank to the depositor is less when compared to the rate of interest collected from the borrower. So the rate of interest is less. The rate of interest paid to the depositor by the bank is less when compared to the rate of interest collected from the borrower is more. So what happened? So the income of the bank. What is the income of the bank is that the income of the bank is that the difference between what is charged from the borrowers. What is charged from the borrowers and what is paid to the depositors. So the difference between what is charged from the borrowers. So the bank collects the high rate of interest from the borrowers, and the bank is paying to the depositors. So the bank is paying less amount of interest to the depositors when compared to the borrowers. So the difference between what is charged from the borrowers and what is paid to the depositors, it becomes the income of the bank. It becomes what? The income of the bank. So here the banks play an intermediate role. So how they play an intermediate role? So it plays an intermediate role between the surplus money holder and the person who is in lack of money. So what happened? The surplus money holder here we can say is a person who is depositing the money in the bank as a saving. The person with a lack of money is that person who is coming to the bank and asking for a loan. So here banks play an intermediate role between the surplus money holder and the person who is not having money with him. So what is the main source of income for the bank here? The difference between what is charged from the borrowers and what is paid to the depositors. We say it as an income of the bank. What is credit? So credit is nothing but loan. It refers to an agreement in which the lender supplies the borrower with money, goods or services in return for the promise of future payment. So when we borrow a money from anybody, we have to give an agreement statement stating that we will give a promise to repay the amount in the future. So credit refers to what? An agreement in which the lender supplies the borrower with money, goods or services in return for the promise of future payment. So this is what we used to say it as a credit. So here we can see two credit situations in various examples. So the credit situation plays a positive role as well as a negative role. So by lending the money and borrowing the money, so the credit situation in the life of a person, it may play a positive role and it may play a negative role. So we can see an example in the next slide how the credit situation play a positive role and how it plays a negative role. So in the case of a credit playing a positive role, so for example, a shoe manufacturer, he gets an order from a trader for 3,000 pairs of shoes. A shoe manufacturer, he gets an order from a large trader in a town here for how many pairs of shoes? 3,000 pairs of shoes. So to manufacture the shoe, he is in need of the workers, he is in need of the leather, etc. So what he does, he starts hiring the workers because with a single person, it is not possible for him to manufacture 3,000 pairs of shoes. So immediately he hires the workers for stitching as well as pasting work. So he has to buy the raw material leather. So in such cases, he borrows the leather from the leather manufacturer. As he is a continuous, as he is a regular customer in buying the leather. So borrows the leather from the leather manufacturer and he promises him to pay him later. At the same time, a trader has ordered 3,000 pairs of shoes. From that particular trader, he gets a advance payment for 1,000 pairs of shoes. He gets an advance payment for how much pairs of shoes here? 1,000 pairs of shoes. So advance payment is there for 1,000 pairs of shoes. He has borrowed the leather from the leather manufacturer, stating that he will repay the money on a particular time after the product has been sold. So what happened with the available advance payment and the leather raw material? So he manufactures the product and he supplies the 3,000 pairs of shoes in a correct time to the trader. So after supplying the product 3,000 pairs of shoes to a trader on a stipulated time here, so he earns the money. So when he earns the money for the 3,000 pairs of shoes here, he gives the money to the workers whom he has hired. At the same time, he has promised to pay the leather manufacturer. He promised to pay the leather manufacturer. So what he did after earning a profit, he goes to the leather manufacturer and he paid whatever he has borrowed for that particular leather. So in this particular situation, even though he has borrowed the leather from the leather manufacturer, he was able to pay the money what he has borrowed in the form of a leather. And he is also able to earn a profit. So in this particular situation, the credit helps him to meet the ongoing expenses of production. What is the credit here? Advance payment for 1,000 pairs of shoes from a trader he has got, and he borrowed the leather from the leather manufacturer. So two credit situation. This is the two credit situation. So he gets the 1,000 advance payment for 1,000 pairs of shoes, and he borrows the leather from the leather manufacturer, and he starts manufacturing the production, and he completes the production on time, and therefore he earns a earning. So with the help of the earning, he is able to return the money for leather. He is able to return the money, or he is able to pay the money to the leather manufacturer. So in such cases, credit plays a very positive role. Credit plays what? A positive role. But at the same time, how does credit play a negative role? How does a credit play a negative role? So here, when we can give an example in the rural areas, a small farmer, he or she grows the groundnut in her field. So to carry out the cultivation, he or she is in need of money. So he borrows the money from the money lender. So when we borrow the money from the money lender, the rate of interest is very high. The rate of interest is what? Very high. So the farmer, a small farmer, as she cultivates the groundnut in her 3 acres of land or in any acres of land. So to carry out her cultivation activity, she borrows the money from the money lender at the rate of interest high. So at particular period of time, the crop gets affected by diseases in a natural manner. So he uses pesticides. She uses pesticides, fertilizers to for the growth of the crops, at the same time to clear the diseases of the crop. So, but even though she uses a large, high quality of pesticides here, so the production, the final yield of the groundnut is very, very less in number. So in such cases, at that particular period of time, she is not able to repay the money. She is not able to repay the money to the money lender. So she falls under debt trap in that particular region. So to solve the situation, again what she does means, she borrows a fresh loan. She borrows a fresh loan from the bank, showing her farming land. She borrows a fresh loan from the bank to cultivate his field. So here it's a normal cultivation. So after 6 months, she is not able to get much production because it is a normal cultivation. So she is not able to repay the money borrowed from the money lender. So at that particular point of time, so she is ready to sell her one part of the farming land. So she sold the one part of the farming land, and with the help of the money and with the help of the sold money, so she started repaying the money to the money lender. So in such a situation, we can say credit has played a negative role. Credit has played a negative role in a farmer, because in one particular period of time, she borrowed the money from the money lender and she was not able to repay that. So in order to repay that, so she borrowed the money from the bank to cultivate, and with the help of the production, she thought she can repay it. But that was also a failure for her. So she started selling a part of land, farming land, and what is that? She paid the money to the money lender. So what is the loss here? She lost the land. At the same time, the rate of interest paid by her to the money lender is very, very high. So in such cases, in this particular situation, so a farmer may fall under debt trap. So here the credit, when she borrows, that is when she borrows a money from anybody, so it plays a negative role. So credit plays a negative role. So when we say something about the banks here, so the banks, it is not that only one loan it is given. There are varieties of loans. So it may be a personal loan, house loan, a car loan, whatever the loans it is given by the financial companies or otherwise the particular banks here. So what we have to do means, there arises a terms of credit. There arises what? Terms of credit. So terms of credit is nothing but the interest rate, collateral, document requirement, mode of repayment. So it is interest rate, collateral, document requirement, mode of payment. So what is the interest rate for a personal loan? So the personal loan, the interest rate may be varied from the home loan. So the rate of interest may be varying from personal loan to car loan or to the any other property loan. So to get a loan, we have to submit the collateral. We have to submit the collateral, that is the property. So collateral is nothing but, what is collateral means? It is an asset that the borrower owns. An asset that the borrower owns, such as land, building, vehicle, livestock, deposits with bank, and uses this as a guarantee to a lender. Until the loan is repaid. So what is collateral? A collateral is an asset that the borrower owns, such as land, building, vehicles, livestock, deposits with bank, and uses this as a guarantee to a lender until the loan is repaid. So terms of credit includes interest rate, collateral, document requirement. So whenever a loan is sanctioned, or whenever we are applying for a loan here, so we have to fill a certain document is required by the bank or the money lender. So they may ask you, what is the loan amount? So loan amount should be there. So what is the period of duration of loan? So what are the documents required? So documents required is that, so what is the asset you have? So for example, for a salaried person, if he or she gets a loan for the house, to build a house, so what he or she has to submit? He or she has to submit the 3 months bank statement. 3 months bank statement, salary account bank statement. Apart from the 3 months bank statement, he or she has to submit the salary proof. He or she has to submit the proof of address. With these 3 documents, and also with the help of a PAN card, voter card, it is possible for them. It is possible for them, for the bank to provide loan to us, if their criteria is satisfied. If the criteria satisfies, okay. So in such cases, document requirement is required. Then after getting the loan, how we are going to pay? Mode of payment, whether we are going to pay yearly basis or monthly basis, or allow the entire principal amount along with interest. So that will be decided even by the bank and even by the borrower. So the discussion will be carried out with the help between the bank people and the borrower. So that is what the mode of repayment. So terms of credit include what? Interest rate, collateral, document requirement, and mode of repayment. So apart from the banks, they collect rate of interest high. When compared to the money lender, they collect rate of interest low. So loans from cooperatives. The cheap source of credit we can see in rural areas is the loans from the cooperative societies. So here in the cooperative societies, what they do means, the members of the cooperative organization, they pool their resources for the cooperation. So particularly here we can see 7 types. It may be n number of types here. So 7 types of cooperative societies here. So cheap source, what is that? The major source of cheap credit in rural areas, we can say it as cooperative societies for the cooperatives. So here the members of the cooperatives, what they do means, they pool their resources, that is they collect their resources for their cooperation in certain particular areas. So automatically, for example, we can see farmers cooperatives, weavers cooperatives, industrial workers cooperatives. So example, a Krishak cooperative functions. A Krishak cooperative, it functions in a village called by the name as Sonapur. So automatically in that cooperative society, how many farmers? That is, the Krishak cooperative consists of 2,300 farmers as a members. So what happened? 2,300 farmers, what they will do means they will deposit what is in their hand. So with the deposits, so for example 2,300 farmers, whatever the amount they have as a saving, they deposit in this cooperative society bank, and with the help of the particular deposit of that members alone, that deposit was considered as a collateral. The deposit was considered as a collateral to show to the bank, and they can get the loan from the bank. So that fund, whatever they borrowed the loan from the bank, using the deposit as a collateral, they are able to get the loan, and with the help of the loan, they provide the loans to the members of the cooperative society. So once the loan is repaid, automatically in another round they can, the cooperative society can get the loan here. So mainly this cooperative society, they provide loans for the purchase of particularly agricultural implements, loans for cultivation and agricultural trade activities. It may be a fishery loans also, and loans for construction of houses also. So, and for variety of expenses. So, but the rate of interest collected from the normal bank and the rate of interest collected from the cooperative society is less when compared to the normal banks. So the cooperative society, the rate of interest is also very less. So all this comes under various credit situations. So here you can test yourself by reading this question. So define bank, define depositor, borrower and lender. What is the income of the bank? Explain the loan activities carried out in the bank. Explain with examples the various credit situations. Define collateral. Define terms of credit. So in the next video, we will go with the formal source of credit versus the informal source of credit and the SHG group. So in the description box, I have given the link of the previous video, how money acts as a medium of exchange and even the barter system of exchange. If you like this video, you can like it, share it, you can comment it, and you can subscribe it. Thank you.